Wait, hit him.
Start. All right, so this is our economics final project. So the companies we purchased and research, Meta Platforms, Cassava, Tesla, Microsoft, and TD Bank. So rationale. So the investment strategies we used, the first investment strategy we used was have an 80-20 split, 80%, 20% split. And so 80% would go into holding stocks for long periods of time from basically the beginning of the game till the end. And then the other 20% would go into short-term stocks that we could sell weekly. We researched predictions from reputable sites, and we invested in different industries so we could have a diversified portfolio. So we invested in software and tech industry, automobile manufacturing, finance industry, clean energy, and pharmaceutical medical sciences.
Okay.
So there were a bunch of factors that influenced our transactions. So one of them was future product releases. So if a company is going to release something into the future, when they release that, their stock will go up, so it's good to buy before. Another one is company acquisition. So if a company is going to buy another company, their stock will go up too. So it's good to get that before. And then the last one was past stock performance. So if it did good in the past, it's more likely to do well in the future. And then the world events that happened were the Russian-Ukrainian conflict, a surge in oil prices, inflation, and at the beginning, a resurgence of COVID-19 because of Omicron. So basically, the Russian invasion increased volatility in the markets, and that caused investors to lose confidence and pull out of their stocks. A surge in oil prices made producing goods more expensive, and it increased manufacturing costs. And inflation caused interest rates to go up, which hurt banks and financial institutions. However, the oil crisis helped some companies, but hurt a lot more.
Our first stock that we invested in was Cassava. And Cassava is a pharmaceutical company that focuses on neurodegenerative diseases like Alzheimer's. It's based in Austin, Texas, and it was founded in 1998 by Remy Morbier. So we bought 69 shares of the company on February 3rd when the stock was at $44.87, and it's just been steadily declining. It started at $65.95 and has gone down to $19.24 in the past 6 months. So let me talk a little about why it's been declining. According to a Forbes article, it dropped 23% because of allegations of the company manipulating their data for clinical trial results of Alzheimer's drug called Simufilam. There were speculations about whether they released manipulated data about the drug, and the same article said that there are questions about whether the company is having a hard time finding people to do their tests on. In a statement that was released in an interview with the CEO, he says that he thinks it's too soon to project enrollment rates for the phase 3 studies. I would expect to see a steady enrollment rate once we have all 175 clinical trial sites activated. The statement didn't sit well with the investors because this was showing that they might not be able to have enough people to test the drug on to see if it's working like they would. And they're just not finding enough people that are willing to undergo a trial in the screening. And because of after this statement and the week that followed it, the stock dropped by 14%. And additionally, in the past 6 months, the whole Cassava stock dropped over 50%, starting from when we bought it. And it's our stock from when we bought this stock on February 3rd, it's dropped by 41%, and we lost $1,289.78. This is the graph from 6 months ago, and this is just showing when it's going up and down. Our next stock was TD Bank. It's an American National Bank, which is a subsidiary of the Toronto Dominion Bank, and we bought 20 shares of the bank on February 4th for $1,660.04. When we bought the shares, they were $83.02, and now they're $74.50. And there was about like a 10.54% loss for us. We lost $175.40. So the first reason that the stock dropped about 4.12% was because of the conflict between Russia and Ukraine. And this, there are a few reasons why this affected the banking giant companies. Firstly, and because of that, and because of the conflict, this made volatility in the markets because of just fluctuations of price inside the international stock market trade, and the sanctions and everything. And the second factor is that because of inflation rates rising, the interest rates have been spiking up, and the companies and investors would take advantage of low interest rates. But now, since of the rapidly rising inflation, the policymakers are being pushed to change their policies because of that. So because of the changes, the investors might want to just pull out and wait to see if the stock will go up. This is just the graph, and it shows when we bought it around February right here, and then it just started going down after. So then we bought Microsoft. Microsoft is the world's largest vendor of computer software. It also provides cloud computing services, video games, computer and gaming hardware, search, and other online services. It was founded in April 1973 by Bill Gates and Paul Allen in Albuquerque, New Mexico. Microsoft's corporate headquarters are in Redmond, Washington, and the company has offices in over 60 countries. The CEO of Microsoft is currently Satya Nadella. On February 3rd, 2022, we bought 15 shares of Microsoft for $208.71 a share. The net cost was $4,630 US, and we had a 9.36% loss on the stock when we purchased the stock to when the game ended. Let's take a look at the company over the past 6 months. On November 15th, the cost of one share of Microsoft stock was $336 US. Currently, it is valued at $261.12 per share. The value of Microsoft stock remained roughly the same from November 15th to January 18th. On November 18th, Microsoft announced that they would acquire Activision/Blizzard. Microsoft stock value went down from January 18th to February 24th due to this controversial acquisition. Then on February 24th, Russia started to invade Ukraine. On that day, the value of most stocks fell significantly. Unfortunately, the value of Microsoft stocks was affected from this, falling from $300.19 to $275.85 in the span of the first week of March. This is Microsoft graph for the past 6 months. So it started up. I started going down a little bit, and up again, and down again.
And so Tesla is an automotive manufacturing and clean energy company. It was founded in 2003, and it produces electric vehicles, such as the Model S, the Model 3, the Model X, and the Model Y. They also produce clean energy products such as solar powers, and solar panels, and solar generators. The CEO is Elon Musk, and so while most automotive companies lost revenue and lost a lot of money due to the surges in oil prices and rising gas prices, Tesla, they benefited because all of their cars are all electric, so they didn't rely on gas and oil. So more people bought that, so they didn't have to pay for gas and oil prices. Some of their competitors include Honda, Volvo, Hyundai, BMW, and Toyota. On February 2nd, we purchased 17 shares of Tesla stock for $928.01 each. The net cost was $15,781.17, and we had a 6.11% return gain from when we purchased the stock till the end of the year. So the past 6 months, the company's stock went down. So on November 15th, Tesla stock price was valued at 1,113.99. And then the stock basically went down and went back up a bunch, and is currently worth at $769.69 for a single share. So from November 15th to February 24th, the value of the stock declined. This is because of the Ukrainian-Russia conflict, which affected the value of many stocks around the world, and because of their competitors. The value of the stock stayed low from February 24th to March 15th, also because of the Ukraine conflict. Then on March 15th, the stock rose sharply, very fast, until April 4th. This is because Tesla announced that their stock would split to lower the prices of the stocks themselves and to increase the amount of stocks they have. But on April 5th, Tesla stock started to fall once again, and now it is still low because the CEO, Elon Musk, purchased the whole company of Twitter, and to do so, he had to liquidate his stocks of Tesla. So see here, you can see it was going down, then up again, then down, and then this is where around here is where the Ukraine's conflict started. So it started to stay down, and then it went back up. That's when they announced the stock split, and then it started to go down again. And then this dip is when he bought Twitter.
Meta Platforms is formerly known as Facebook. It's a technological conglomerate. It's a parent of 91 companies, including Facebook, WhatsApp, Instagram, and Oculus VR. The company was founded in 2004 by its current CEO, Mark Zuckerberg. And the company, on February 2nd, we purchased 45 shares of Meta Platform stocks. The stocks were valued at $243.78. And our total was $10,975.10. The stocks were performing poorly, so we sold 33 of the shares on February 18th. The stocks were valued at $206, and the total return was $6,798.02. The value of the stock has not recovered since then. Let's take a look at the company's performance in the past 6 months. On November 15th, Meta Platform stock was valued at $304.77. Currently, the company's stock is worth $200.04 from November 15th to February 2nd. The value of the stock stayed roughly the same, but on February 2nd, Meta Platform stock dropped very sharply from $323 to $237.76. This was due to weak earnings and lower than expected guidance. Ever since then, the value of Meta Platform stock has remained low. This is how the graph started off normally, but then on February 7th, it drastically decreased, and then after that, it just
Okay, so these are the weekly trends. So the only profitable week we had was week 1, where we made $35. Week 2 was the first loss, where we dropped negative $1,173, and then we came back up a little bit in week 3 to negative $41, but then we had another big drop in week 4 to negative $3,932, and then in week 5 we went down even further to negative $5,000, and then in week 6 we dropped lower to negative $6,900. Then after that, week 7 we went down to negative $8,000, and then after that we started going back up, because then we were down by negative $6,000, and then in week 9 and 10 we went back down to negative $2,000, and then we dropped to $4,000, and then week 12 was the final week where we ended with $7,300.
So this was our portfolio, and you can see that the only stock that we had that wasn't negative was Tesla, and you can see that at the time that this was taken, we were down by about 6.5 thousand. Although our all-time low was over 11.5 thousand. judging by our losses, we can see that almost all of our stocks didn't go as planned, and each one of us lost us a lot of money. So, with my reflection, I think that it's delving into the stock market world was a good experience for me in many ways, because I learned how to make choices about like my money and how to invest in research before I do something, and how to like deal with the stock market in times of conflict and turmoil when everything is like not going as planned. The project was really interesting and it was realistic, which I'm sure taught me some valuable lessons about the real world of investing. So this stock market game has been a great learning opportunity and experience for me. I learned how to manage money in stocks. We research companies and invest in the stocks. We thought we'd make money. We did not make money. We lost a lot. And I learned how to feel how it feels to be a real life investor.
I think it was a great experience for me to learn how the stock market game works, and I learned that it's a really big chance to either win or lose money. I learned about how the market during the times of the war and turmoil and how to choose and research different companies. It was a great time to put myself into the place of an investor and learn all about the stock market game.
I learned a lot of things in the stock market game. It gave me insight about the world of stock trades, and I learned that even if you make a lot of money, there's still a risk of losing all of it. And I learned that many hardships can arise when dealing with it, and like things like international turmoil and shortages. And I learned that you should research a lot more before you invest in companies. And I feel like overall that this was a good experience for me, and I hope you learn how to invest properly in a way that would profit.
All right, just a quick question, so we don't want to run over. Why did you guys decide on the 80-20 split?
We decided on that because usually most of the research we looked at, they said that the long term would bring better profit, and we were originally planning to have all of it long term, but then Facebook, we bought it the day before it dropped, and so we started to lose a lot of money, so we had to make that we had to sell it the day after, so we only had Facebook for 3 days, and it lost us a lot of money. That's the reason why. Otherwise, it would have been all of it. It would have all of it been long term.
All right, none of these pressing questions. So, in week 7, it says that you guys had a major increase in your earnings. Why? What happened in week 7?
That's when Tesla announced the stock split.
Okay, so all right, you guys had quite a bit of money in Tesla.
Tesla.
That helped you out. All right, thank you guys very much. All right, so it looks like we got about 14 minutes. That was a longer presentation. I need the next group, if you come up, please. We have Ibrahim, Mujib, Diaz, and Yusuf. Okay, who sent me the presentation?
Present tomorrow?
Yeah. Stock market and project US and Joshua. We purchased 20 stocks of Meta for $4,900, so $25 each.
Wait, hold on, let me pause you for a second. Can somebody go to more and take that off the screen? Hide voting right there. Thank you.
We purchased 20 stocks of Meta for $4,900, $245 each on February 3rd. Our incentive for buying Facebook stock was because of the new change from Facebook into Meta. Our group hoped this would mean that Meta would expand scope and make bolder and more profitable business decisions. Our strategy initially was to buy it low and sell high. When Facebook dropped from 323 to 237, we had high hopes to make profit. In the end, Meta was very unsuccessful and cost many investors to lose thousands of dollars. On the morning of February 3rd, Facebook dropped $83. Facebook stayed on a steady decline and
still is low to this day. What happens to Facebook? The reason why Meta plummeted was ultimately due to Meta saying that the company forecasted weaker than expected revenue growth in the next quarter. It also took a big hit from Apple's new privacy changes and showed the first quarterly decline in the daily active users on record. Our main mistake in the stock market game is that we were too scared to spend our money. Our original strategy was to go for a long run and sell less in it. We tried to play it safe and spend only a little of the money we had. We expected the stock market to have major increases in a short period of time. I also learned that no stock is also going to rise. It's always going to rise, and it's okay to sell low and buy when it's necessary. I also should have researched deeper why Facebook dropped so much, and I should have noticed how unusual the stock's activity was. Listen, the reason we listened to Apple is because January 27th, Apple stock was $109, a little lower than usual, and that started rising the next day on January 28th to $170. We then bought 30 shares for $5,138 because we saw that it was right. By the end of the stock market game, around April 15th, the stock had been down to $7.10 since we had bought it on February 4th. We're around today, the stock would rise just from seeing a small increase in the graph. We got a 15.8% increase per stock. Throughout the stock market game. Apple has been facing supply issues due to COVID slightly slowing it down, which is why it's been slowly on the decline recently. Another factor that plays into why it's been slowly declining recently is that there has been a shortage in terms of increase in the production of Apple products. The war going on might also play a factor to the stock going down. We learned to not hold on to so much of our money, but rather to invest it and do more research into what we invest in, instead of basing it off of what we thought was good and what we thought wasn't. To ever get next time, we would find out more about certain stocks and spend more money early on, so we're not left with a lot of money unspent and losing a lot of money in the end. I chose to invest into Apple because I thought it would end up doing well. The reason we invested in DoorDash is because on January 27th, the stock was $96 and it was at its lowest, and we predicted it to spike. We then bought 15 shares for $1,462.25 or $97 each share because we predicted it would rise gradually. By the end of the stock market game on April 15th, the stock had been up 10.82 or 10.99% since we had bought it. There was a 33.20% decrease per stock and a negative 32.70 per stock throughout the game. The stock has been down because the increased gas prices. It's hard to get drivers to deliver the food, and the war might also play a factor in the stocks going down. I decided to invest in DoorDash because I thought it would rise up and benefit us, which it kind of did, and we should have invested more into DoorDash instead of holding on to our money. We should also do deeper search into the stocks we invested in to make it better. Next time we'll invest into more companies with bigger shares.
Honeywell International. Honeywell International is an American company that specializes in making consumer electronics and products for everyday use, such as fans, thermometers, air conditioners, humidity filters, smog, safes, and much more. The reason behind us investing in Honeywell is due to its wide variety of products and the fact that they have been a major production in N95 masks during COVID-19. The company was
Slow down a little bit and speak up a little bit more.
The company was founded in 1906 in the state of Indiana and has since been making products for everyday use. The company's first CEO and founder was Mark C. Honeywell, and the current CEO of Honeywell is Darius Adamson. Darius had become CEO of Honeywell in 2014. Last year, Honeywell had been featured on the Fortune 500 and been ranked at the 99th spot. The total net worth of the company as of May 2022 is $131.74 billion.
Graph.
On February 4th, we invested around $3,900 for 20 shares, which came around to $200.65 for each share. Over the course of 5 days, we have seen that the shares of the Honeywell stock share prices have risen by $7. On February 3rd, 2022, the Honeywell stocks had decreased by almost $16, going down to $191.74. This was when we had decided to invest in Honeywell because it had seemed to us that maybe the stock share prices could rise. However, this thesis of ours was not correct, and the stock would end up rising and falling unpredictably. What happened? During COVID-19, Honeywell was starting to come out with N95 masks, which were a great help to many people. The demand for masks had soared during COVID-19. When the lockdown was announced in March of 2020, the stock of Honeywell had started to rapidly decline due to no customers. This lockdown being a factor, the stock had drastically decreased, and it was at its all-time lowest in 5 years. Another factor could be the ongoing dispute/war between Ukraine and Russia. This could be altering or changing stocks.
Conclusion.
We learned that we should invest more of our money rather than keeping it. I also learned that we should not invest in the companies that we think are going to do good because the stock market is unpredictable. We should also have done a lot more research towards how to predict what companies will succeed and also which companies to invest into. If there were to be another stock market, I would use that money more often and be a lot more cautious, and I would search for different stocks/companies to invest all the leftover money into. I decided to invest into Honeywell because the reason being that since they produce and manufacture a multitude of products ranging from daily use products to aircraft parts, engines, and much more.
Our strategy is we try to follow invest early and go for a long run. If we want to sell it at the end and make a lot of money, but we didn't go as way. The companies we chose to invest on were making it just so we thought would do good since it was our first time doing stocks. Yeah, I ended up spending too much of our money at all. We spent 14% of the money into stocks, and the rest of the 85% was left untouched.
That's it. All right. Looking at it, so a couple questions. You guys mentioned that one of the stocks didn't perform well because of the Apple's privacy change. What did Apple? What privacy change did Apple stop or company do? You guys remember? If you don't know, it's okay. I just remember you guys mentioning it. As far as okay. I guess one of the statements that I was thinking is don't be afraid, right? Don't be afraid when you invest, right? And this is one of the things I'm talking to my son about currently. You know, his stock right now is plummeting, as many of people's stocks right now are plummeting. You know, and a lot of people that have their retirement in the stock market are a little bit nervous right now. You know, but the war will not last forever, right? These supply chain issues will not last forever. There's a hope, right? We don't know, but there's a hope that eventually the market will increase. Okay, so don't be afraid to invest. So I gave you guys 100,000. You know, and it's the same thing last year. You know, very few people took that and invest. You know, multitudes of thousands of dollars. A lot of people, just because they're nervous or maybe they don't know how to use the game, just invest just a little bit, right? And it's like, if I just put my pinky in or my pinky toe in and gets wet, no, put everything in, right? And see what happens, okay? But also you guys realize that you have to do your research, right? Like I was thinking about DoorDash. I was talking to my wife about DoorDash yesterday. You know, of course, DoorDash today, I don't know why, you know, young kids don't cook. Young people don't cook. Maybe adults don't cook. You know, we were at Chipotle yesterday and it was like a constant flow of people coming in and picking up food. Okay. So I believe that DoorDash will probably increase. But at first, with these gas prices being so high, a lot of people are going to say, hey, I'm not spending all my gas for that. It's not worth it. So that's why it decreased. So I hope that you guys learned a lot about the stock market. But one thing that I will say is don't be afraid, right? Put your foot all the way in, right? And get it wet and see what happens, right? Last question before the bell rings. Honeywell, why'd you guys pick Honeywell? Where did that come
Because
from?
they have like a lot of products, because they've been around for a long time and they've been like helping out with the wars and
Okay.
by producing aircrafts and like vehicles and also like daily use of products. Like
All right, thank you. Some people are talking. Like I have arthritis in my neck and I can't turn the seat. Okay. All right, guys, good job. Hey, make sure you push your chairs in, guys, when you head out. Wait. The bell's not wrong. I was just letting you know.